What are we at? The current bid on the Illustrator, $12,400,000.
No way. No way. No way. What? No way. No way.
He just wants to end it.
No way. No way, bro.
One more bid's the new record all time. 12.5 million.
No way, bro.
So, Logan Paul has now claimed he sold his PSA 10 Pikachu Illustrator card for a wild $60.5 million, and the whole thing feels off from the jump. The bidding clips look staged, the reactions look forced, and the energy in the room feels more like a hype show than a serious transaction. At the same time, he rolled out his latest business idea, letting people buy digital versions of gaming collectibles. That pitch sounds way too close to the old liquid marketplace situation that already left a bad taste in people's mouths. When someone keeps launching shiny new projects while old complaints are still floating around, it raises eyebrows fast. He did respond to the liquid marketplace backlash on Twitter, saying refunds were sent out and people were made whole. But when you actually look into what some users are reporting, the numbers don't add up. Several claim they received only a tiny fraction of what they originally invested. That gap between the public statement and what customers say they experienced is where the real tension sits. It's not about emotion, it's about receipts. If someone says they fixed the issue, the proof should be clear and easy to verify. Now, about that card sale. The social media clip of the massive bidding war shows a seller celebrating hard, smashing a gong, yelling, "No way, bro," and acting completely stunned at the offer. That reaction might be entertaining, but from a buyer's perspective, it's a red flag. If the person selling looks shocked that someone paid that much, it makes you question whether the price reflects actual market value or just pure hype. Big celebrations are great for content, but serious collectors usually move a little quieter when that kind of money is involved. For context, Logan originally bought the card in 2021 for what was reported to be $5 million. Alleged is the key word here because critics have long argued that bold price tags can create buzz and push future valuations higher. The Pikachu Illustrator is rare, no doubt. It was awarded through an art competition decades ago, and only a limited number exist. On top of that, the PSA 10 grade is supposed to mean near perfection, no noticeable damage, clean edges, clean surface. But when people zoom in on detailed photos of the card, they point out visible whitening and surface marks. A PSA 10 is meant to represent a pristine condition. So if flaws are noticeable, collectors naturally start asking questions about grading standards and long-term value. In high-end collectibles, condition is everything. Even small imperfections can shift prices dramatically. That's why this entire situation has the hobby world talking, debating whether this was a genuine record-breaking sale or just another headline built on spectacle. So yeah, like Ms. G, I pointed out, this card realistically looks closer to an 8 than a PSA 10 when you actually study the surface. Collectors who know grading standards say the whitening on the edges and visible marks should automatically drop it down. And if you look at how the card was handled over the years, it gets even crazier. There are old photos of it sitting in greasy pizza boxes, propped up wearing a gaming headset, posed in random goofy setups for content. Sure, it stayed inside a protective slab, but presentation matters when you're dealing with something this rare. When someone treats a supposed crown jewel like a party prop, it sends a message about how seriously it was valued. Then somehow it ends up selling for $16.5 million to a new buyer who clearly has deep pockets. Money can buy access, but it does not automatically mean someone understands collectibles. On a live stream, the buyer confidently tells Logan he believes the card could be worth $100 million one day. That moment alone had people raising eyebrows. The way it was said felt less like a careful investment analysis and more like someone hyping up a lottery ticket.
Logan Paul's involved with chat is a scam. In my opinion, I think the dude is the biggest fraud that has ever happened in the history of America. The reason why this is a scam is because this Illustrator card, if you look at it, it's not a PSA Gem Mint 10. This is an 8 that Logan got regraded twice that somehow got upgraded to a 10. And the centering on this is trash. It's not a 10. That's why this card is a fraud. If you get this regraded, not as Logan Paul, it's an 8, 8.5. It's not that good of a card. Every expert will tell you this is not that good of a card. But somehow Logan Paul somehow got a Gem Mint 10. It's bullshit.
Logan's reaction did not exactly help either. He just leaned into it with wide eyes and played along, while the room felt more like a show than a serious negotiation. Meanwhile, the treasure hunter energy in that stream was wild. Logan looked calm, almost detached, like someone who already secured the bag and was ready to move on. Ken Golden could barely hold eye contact with the buyer, mostly looking over at Logan instead. The whole vibe felt awkward, like everyone knew the number was massive and maybe a little surreal. When a deal gets that theatrical, people naturally start questioning whether the price reflects true collector demand or just high-pressure spectacle. And during all of this, Twitter was exploding. His comments were turned off, which only added fuel to the speculation. Instead of direct replies, users were quote tweeting him nonstop, bringing up the liquid marketplace complaints and the timing of this sale. When backlash builds and the comment section disappears, it does not calm the crowd. It usually does the opposite. And on top of all that, he started blocking people left and right. Anyone questioning the numbers, anyone asking about profit splits, gone. Let me read you some of the quote tweets that were still visible. One user wrote, "Logan, you co-founded a company that sold tokenized ownership of this card. I was one of these owners. How are you going to take care of those transactions?" That's not a troll comment. That's someone claiming they actually bought into the fractional ownership model and now wants clarity. Another post laid it out step by step. Logan Paul bought a Pokémon card for $5.2 million, sold 51% of the card for $2.5 million, abandoned the marketplace, sold the card again for $60.5 million, no profit share for 51% buyers, clearly referencing liquid marketplace. Then the same thread points out he's already announcing a new company called Ripet, complete with referral programs and promises of high-end Pokémon cards as incentives. From the outside, it looks like one project cools off and another one pops up immediately. That pattern is what people are reacting to. Now about that Ripet situation, we'll break that down deeper. But zooming out for a second, a lot of longtime collectors feel like the hobby shifted the moment influencers jumped in heavy around 2020. For decades, Pokémon card collecting was a niche community built on trading, grading, and genuine love for the franchise. Prices were driven by rarity, condition, and steady demand. Then, massive spotlight moments started pushing certain cards into headline territory. When someone with millions of followers buys ultra-rare pieces on camera, it changes the temperature of the entire market overnight. Some supporters argue that rising prices benefit collectors because their assets gain value. That's technically true in the short term, but critics say when hype spikes too fast, it creates artificial demand that can crash just as quickly. People still remember the NFT boom where assets were promoted at sky-high prices, only to lose most of their value later. The fear now is that the same cycle could hit parts of the Pokémon community.
Possible angle, and I concluded this is a 1-1. Wow. So if it truly is a 1-1,
Yep.
it sits against all the other icons like the Mickey Mantle,
Indeed.
PSA 10, of which there's 3,
Indeed.
the Wagner 8.
Indeed.
If those cards sold today, I mean, you know better than anyone.
Yep.
I think they're 50 to 70 million personally.
Wow.
Yep.
Wow, you did your diligence.
So,
Good
you
for
know, I think this card's a $100 million card. It just depends on how long you want to wait. But I got to tell you, man, I mean, we're printing the money like crazy.
Yep.
And the currency is being fundamentally debased, and these store value assets like collectibles, like gold.
Yep.
I T-Rex dinosaur fossil. That's on my list.
What?
I'm gonna buy the Declaration of Independence, maybe from you.
Yep.
We'll find out.
Oh, this is crazy.
And I'm not stopping there. This was only the beginning.
Yep.
This is my brother, Tony Mucci. He's a film director.
Oh, the Pokemon Master.
And we have been fans of Pokemon since we were kids.
Oh my God.
This was the right way to start the treasure hunt.
You just starting?
I just started it, baby.
Bro, that is so epic.
The treasure hunter.
The treasure hunt.
And if you want to learn more about it,
Yes, I do.
go to treasuretrove.com
I'm so intrigued.
and follow
I'm
at
so
Treasure Trove on
intrigued.
Instagram. There's a lot more coming on
This is crazy.
This is crazy,
Just the
dude.
beginning.
This is bigger than the card. It's bigger than me. I don't even understand what's happening right now, but it's surreal, dude.
Bro,
It's surreal.
God bless you. I think this is a great first acquisition for that treasure
I
collection.
fucking agree, man.
Oh my God.
I agree. Dude.
You're a gangster. You are fearless, bro. I was talking to the camera, thinking I was talking to someone out there in the audience.
man.
He's right over there. He's just right over there.
We were listening. But we were listening.
Here, so was Ripet Ray.
When prices surge mainly because of influencer buzz rather than organic collector demand, the correction can be brutal, and that's why so many people are watching this unfold very closely. But what about everyone else who's been collecting and buying into this market for years? When prices get pushed up fast by viral moments and influencer hype, the risk is that regular collectors are left holding the bag if things cool off. A sudden spike can feel exciting, but sharp drops hurt the everyday buyers the most. There's a clip of Misfit explaining how these headline-grabbing plays generate massive attention, and honestly, from a marketing standpoint, it's easy to see how the buzz snowballs. Big numbers, dramatic reveals, live stream reactions, it all feeds the algorithm and keeps the spotlight locked in. If Logan genuinely loved trading Pokemon cards as a long-term hobby, critics argue it probably wouldn't revolve around constant stunts and viral spectacles. Remember the $5 million first edition box that turned out to be fake? That entire saga dominated social media. Even though authenticity questions were raised early, the situation still generated huge traffic and conveniently kept attention on his other ventures like Liquid Marketplace and Prime. Attention equals leverage in today's market, and leverage can move prices fast. Then there's the CryptoZoo controversy, where buyers reported major financial losses and were later told refunds would come. Legal disputes followed, and the situation escalated into court filings. Now add the Pikachu Illustrator situation into the mix. The card was placed on Liquid Marketplace, a platform he co-founded, where fractional ownership was promoted as a way for users to collectively hold and even vote on the future of high-end collectibles. Buyers reportedly put in around $2.5 million combined for a 51% stake. Later, the card was bought back from the platform for around $250,000, a number that confused many users who had paid significantly more into the shared ownership pool. After that, the card resurfaces and is sold again privately for $16.5 million. Naturally, platform users began asking what that meant for their portion. Some claim they were unable to withdraw funds and say they lost substantial amounts. What adds to the frustration is hearing references to Liquid Marketplace spoken about almost like it's a distant third party, even though he has publicly identified himself as a co-founder multiple times. When leadership and accountability blur together, trust takes a hit. Another confusing detail is the statement that the card supposedly did not sell out on the platform, with only 5.4% fully sold. That percentage clashes with earlier claims about broader fractional ownership. When numbers shift depending on the moment, people start digging deeper. And in a space built on collectibles, grading, and long-term value, credibility is everything.
Here's what's happening, and I'm telling you what's going on because I know people in this industry, chat. It's Logan and his gang went around the world in 80 days to everyone who's a Saudi prince and all these Saudi guys and told them how this is the new thing and everyone should be collecting this, and this is art, and this is the thing to invest in. So they went to all the Saudi people that he probably met from Jake, from all the boxing stuff, and he told them all to invest in Pokemon cards. And they are destroying the market. Not murdering, destroying them. Who can afford this? Who wants to buy a $150,000 Mewtwo? It's stupid. It's so dumb. He ruined it. If I can't buy this, why did this price go up 33% overnight? It's because Logan. It's because Logan is making it by telling all of his Saudi friends to buy it, and he's making this an impossible hobby to get into now. It's impossible.
What makes this even messier is that Liquid Marketplace's own social media accounts previously celebrated that the card had sold out. Screenshots were posted showing the shares fully claimed, which would total around $2.5 million. Then Logan responded to the backlash by saying only 5% of the card was actually purchased and that he bought it back for $250,000. That explanation instantly raised eyebrows. If only 5% sold, why were there public posts stating the shares were completely sold out? Those two claims do not line up, and that's why people keep calling the situation shady from every angle. Kavos highlighted this contradiction on Twitter, pointing to the receipts. One image shows the platform clearly stating the card shares were gone. Another statement from Logan suggests the opposite. When financial products are involved, consistency matters. If users believe they bought into something that was fully subscribed, then later hear it barely sold, confusion is guaranteed. There was also a claim that once the site was back up, users could log in and withdraw their funds. However, Rattle Pokemon, who has closely followed and investigated Logan's Pokemon-related ventures, stated he has spoken directly with fractional buyers who say they still cannot properly access their accounts. At first, it sounded like no one could log in at all. Later, clarification suggested some users could access the platform, but withdrawals were extremely limited. One investor reportedly put in $16,500 and was only able to withdraw around $150. That kind of return is what sparked outrage online. When someone expects meaningful liquidity and instead sees a tiny fraction available, frustration is inevitable. Situations like that are exactly why regulators step in when they believe investor protections may have been violated. Reports indicate that the Ontario Securities Commission filed an application for enforcement proceedings, alleging that Liquid Marketplace, the Toronto-based company co-founded by Logan Paul, operated in a way that may have misled investors. The commission claims the platform facilitated fractional ownership of trading cards and collectibles in a manner that could constitute securities violations. When agencies like the Securities and Exchange Commission or provincial regulators start looking into a company's practices, it signals that the matter has moved beyond social media drama and into formal legal territory. According to the Ontario Securities Commission, top liquid marketplace executives, including Ryan Bahari Amin, Nick Dell, and Dennis Daz, allegedly diverted millions in investor funds for personal use. The OSC claims they misled staff when questioned about compensation and may have breached Ontario securities laws. Notably, Logan Paul was not named in the proceeding. His absence from the formal case surprised a lot of observers, especially given his public association as a co-founder of the platform. Legally speaking, being a co-founder does not automatically mean being charged, but from a public perception standpoint, people still connect his name to the controversy.
Why would Logan sell this card or care about this at all if he didn't, this was his baby, quote unquote, right, for years. He had this as his baby. This was all I saw about him was WWE and this, and that he owed people money. If this was really his baby, and he knew it was going to be worth $100 million, he wouldn't sell it. He'd be like, dude, this is just proof that the card company and card business is going to go up. He sold it for a reason. You got the bag. This miniature Hassan got the bag. And there's the worst two people you could ever do a deal with right in front of you. Golden and Logan Paul. And you bought an $18 million chain from them. You got scammed to hell. And they're just looking at you laughing. Golden's a scumbag from the dark depths of the ocean. And this guy can't even look at you. You got scammed so hard. He's looking at Logan like, is this for real? Did he really just give me $1.8 million? Logan's just like, right. He can't even do his WWE act on this guy. He's just like, holy you're.
What continues to frustrate critics is the buyback of the Pikachu Illustrator card. Fans reportedly purchased 51% of the card through fractional shares totaling around $2.5 million. Later, the card was reacquired from the platform for a fraction of that amount. Many buyers argue they never meaningfully controlled the asset in the first place. If the structure of the shares did not grant true ownership rights, that raises serious concerns about how the product was marketed. Investors who believed they owned part of a high-value collectible now claim they received no proper compensation, despite the card later being resold at a dramatically higher valuation. If the original structure had functioned as expected, some estimate those shareholders could have seen significant returns. Beyond the fractional ownership dispute, another layer of controversy involves prediction markets. Platforms like Polymarket and similar sites allow users to wager on outcomes tied to real-world events, including high-profile auctions or sales. In this case, users could bet on whether the card would sell above certain price thresholds. For example, someone could place money on it selling above $15 million and potentially double their stake, if correct. The concern raised online is whether anyone with insider knowledge about the final sale price could have unfairly benefited from those prediction markets. There is no public evidence proving wrongdoing in that regard, but the optics alone spark debate. When major sales, public hype, fractional ownership disputes, and prediction betting all collide in the same timeline, it creates a storm of suspicion. Even without formal charges tied to those specific claims, the overlap between private knowledge and public betting markets is the kind of issue that always attracts scrutiny. Now here's where the speculation really takes off. According to posts circulating on Twitter, Logan allegedly placed bets on the prediction market tied to the Pikachu Illustrator sale and ended up making over $300,000. One user, Red7A1RUM, pointed out that the card sold for a record $16.5 million at Golden's auction and said plenty of people profited on Polymarket, including himself. Then he added the big claim, what if Logan Paul also made money on that same market? Screenshots shared online show one bettor turning $4,000 into $43,000 by wagering that the card would sell for over $12 million. The same account also placed $2,000 on it, clearing $15 million. The bigger concern raised by observers was timing. About 6 days before the auction closed, new wallets reportedly began aggressively buying positions in the higher price brackets, specifically the 10, 12, and 15 million ranges. That sudden activity caught attention because it happened shortly before the final result became public.
We had this update on February 11, 2026, where Logan says LM has advised that unclaimed funds have been released and can now be withdrawn. Then we ran into this little issue where the one-time password that was used previously by the users of the platform, and no one was able to log in, to my knowledge. No one that I talked to. I asked. The closest thing I saw was that they could try to log in. The one-time password did not function. Now we get into a user who is now able to withdraw $182.83. So surely that's the amount of money they put into the platform, right? Not even close. Their balance previously, $16,798.16. That's quite the drop here. Where's the rest of the money on the item that didn't sell out? Crazy.
Here's where it gets technical. When someone creates a Polymarket account, the platform automatically generates a unique algorithm-based color splash profile picture tied to the wallet address. In theory, no two accounts should share the exact same image. Online investigators compared the green splash avatar, shown in a Polymarket promotional clip featuring Logan, to the avatar connected to one of the high-value betting wallets. Side-by-side screenshots made them look nearly identical. Activity logs from the wallet in question show scattered purchases. Small entries like $3 or $8, followed by massive jumps like $512,000, $2,000, and other irregular amounts. The pattern looked chaotic, but by the end of the event, the total profit reportedly exceeded $300,000 across different brackets. It's important to note that none of this has been formally proven in court. Matching profile pictures alone do not confirm ownership of a wallet, especially when the images are algorithmically generated. However, the visual similarity combined with the timing of the bets fueled online debate fast. When someone closely associated with a high-profile sale appears linked to large wagers predicting that exact outcome, even indirectly, people are going to question it, whether coincidence or something more strategic. The optics alone kept social media buzzing nonstop. Think of it like a Minecraft seed. Every time you generate a new world, the map is different because it's randomly created. The same idea applies to those algorithm-generated profile pictures on prediction markets. Each wallet should produce a unique color splash tied to its address. That's why people online are so locked in on the matching green avatar screenshots. They're arguing that the odds of two identical ones appearing are extremely low. Now, in traditional financial markets, trading on material non-public information is known as insider trading. In the United States, proven violations can carry heavy consequences. Civil penalties can reach up to 3 times the profit gained, along with potential multi-million-dollar fines, repayment of profits, and in extreme criminal cases, even prison time. Those are maximum penalties and depend entirely on evidence and prosecution. But the framework shows how seriously regulators treat unfair informational advantages. To be clear, no court has ruled that Logan committed insider trading in this situation. What people are reacting to is the appearance of a possible connection between a wallet that placed aggressive bets on the sale outcome and a promotional video where a similar account profile image appears on his phone. Critics argue that if someone involved in orchestrating or knowing the final sale price ahead of time placed large wagers predicting that exact result, regulators would typically want to examine it. Supporters counter that matching visuals alone are not proof of ownership. What escalated the outrage is the belief that the same account may have been used publicly in marketing content. If that connection were ever verified, it would raise serious questions about judgment and transparency. Right now, though, it remains online speculation, not a confirmed legal finding. Meanwhile, frustration continues to build because crypto zoo buyers still claim unresolved losses, and liquid marketplace investors continue voicing complaints about limited withdrawals and unclear ownership rights. With multiple controversies overlapping, every new allegation lands harder than the last. Logan, for his part, continues moving forward with new ventures, including a platform called Ripet. Critics warn viewers to be cautious before investing in influencer-backed financial products, especially when previous projects remain under scrutiny. Whether any authority ultimately investigates the prediction market claims is still unknown. But in today's climate, when massive sums of money, collectibles, and online betting collide, public trust can evaporate fast if transparency is not crystal clear. The future of collecting starts now. Get VIP early access to Rip packs that represent real physical graded cards. Sell them for instant cash, store them in our vault, or ship them straight to your door.
What is up, collector? Ripet is coming soon, and you're gonna want to be first in line. So we're growing our wait list for users to get early access and to give back to the day one collectors who help us grow this thing. Top referrers will climb the leaderboard to get rewarded with things like the holographic pull from this first edition heavy pack, a $30,000 base set unlimited box, and a PSA 9 first edition Lugia valued at roughly $7,000. Additionally, for every milestone of users that we hit, we'll do giveaways with the entire community with things like this crystallized Daniel Arsham Squirtle figure, multiple sets of base set packs, a first edition heavy pack, other great cards like Arcanine, Snorlax. You get the point. Awesome stuff, guys. My team and I are grinding 24/7 to bring this platform to life. So please tell your friends and get ready to rip it.
That's the pitch for Ripet. On the surface, it sounds slick and modern. In reality, it's basically a rip and ship service where someone else opens sealed trading card packs for you on camera. The twist is that the entire platform appears to operate through a single central shipper handling the process. So let's break this down in simple terms. You buy a sealed pack through the platform. Instead of opening it yourself, you select the option to have Ripet staff open it for you. They record the opening, show you the results, and then you can either cash out instantly, store the card in their vault, or request shipping. That's the full concept. The company states that if damage occurs during shipping, replacement policies apply, which is at least some layer of protection. But here's the question many collectors are asking. Why not just buy and open the pack yourself? Part of the appeal seems to be speed. If you pull something valuable, you can flip it instantly without waiting to list it on eBay or negotiate with buyers. For some people, that convenience might be attractive. For others, it removes the entire fun of physically opening the pack in your own hands. Collecting has always been about the experience as much as the value. When you outsource that moment, it turns the hobby into something closer to a financial transaction. Now, zoom out. The timing of Ripet launching right after the high-profile Pikachu Illustrator sale raised eyebrows. That massive auction drove traffic to Golden's bidding platform, spotlighted Logan's brand again, and now introduces another new venture. On top of that, the reported buyer of the $16.5 million card, AJ Scaramucci, has announced plans to launch a site called treasuretroves.com to document high-end collectibles. He says it's purely for showcasing and documenting rare pieces. Maybe that's true, but historically, when large-scale collectors build platforms around assets, monetization often follows at some stage. At the end of the day, the common theme here is commercialization. What started as a niche hobby has evolved into live stream auctions, fractional ownership, prediction markets, and now remote pack ripping services. Whether that's innovation or over-financialization depends on your perspective. Let me know what you think about all of this. Do you see Ripet as a smart evolution of the hobby, or just another cash grab tied to viral hype? Drop your thoughts in the comments, like the video, subscribe to the Beyond Fame channel, share this with anyone following the situation, and I'll catch you in the next one.